Hello everyone, it's Red with RedDragonLeo.com. It is a Sunday night, the 26th of June. And looking here at the weekly chart on the US dollar, you can still see we are headed up, and I think this is going to continue over the next several months or so. And the dollar is going to get stronger and the market's going to get weaker. So if you actually draw a line down through here, I do believe it's broken out. It has already broken out. So while it might go up and turn and give a little bounce to the market, to me it looks like the trend for the overall market is down for now, and for quite a while. Could be the top for the year and the top for the next year. It could already be put in. Now, I'm not going to say for sure, but it's certainly looking that way. On the dollar chart, you can clearly see it's still going up. It has just barely went above the zero mark after being oversold here for quite a while, so you should expect it to continue at least up here and hit this moving average, 200 moving average on it. Then you might see a little back down in the market, or a little back down on the dollar, which would give the market a lift. Sorry. So because it is putting negative divergence right here, as you can clearly see. So it's at a point to where it might give a little pause in the market, but right now it's indicating that at least the next few days it could continue up, you know, and put the pressure on the market before it actually hits that. So that would indicate that Monday and Tuesday could be down days, if I'm reading this correctly. So, but it is still pointing up. So for now, as long as the dollar and the market trade inverse of each other, you know, and I do expect that to continue, then as long as that dollar is headed up, then the market should be headed down with bounces along the way. But it is certainly looking like primary wave 3 has started. You can look here at this monthly chart, and you can see we have hit that 1267 area right here on the monthly chart, and I do expect them to close it above that level of this blue moving average right here, which right now it's a 10-day moving, not 10-day, 10-period moving average. Okay, and you would expect them to close it above that this month, and I think that they will. I think that they'll bounce it beforehand and close it above. Remember, this week ends the month. The month ends out this week. But you know, you look at this, and it does give you all the impression that we are starting primary wave 3 down. You had a high here up here. I don't know what level that is, but I would venture to guess that's about 66 or 67, which is typical for a wave 2 bounce, is for the RSI, for a strong wave 2 bounce, to get up there in the 60s before it rolls over, and it has done so. So that being the case, then this whole move down, it could be the primary wave 1, and we could have already completed primary wave 2, and we're starting primary wave 3, of course, with bounces along the way. But it is certainly looking that way, that that is the case here on the monthly chart. Everything is pointing to it. So at this point, I don't think we're going to have a new high for the year come in. So here on the weekly chart is still not oversold technically. You can look at it right here on the full stochastics, and we are in oversold territory, but there's no sign of this hooking back up yet. And even though, you know, this appears like it might want to hook back up, it has not done so yet, and it is technically still in bull territory. You know, it's above the zero line, folks. It's here at 25 area. You know, so until this goes below zero and gets really oversold, when this thing finally gets into October, we could see it at negative 75, negative 100, negative 125, just like this over here. This could very well happen once, if this market crashes, as I expect in October. But between now and then, of course, we should have some bounces along the way. Maybe this thing will try to curl back up and trade sideways a little bit. Might look kind of like this, go down, or more like this area right here. Start heading down and dip up a little bit, then back down. That would indicate 1, 2, 3, 4, 4 or 5 weeks there of up move, then back down. You can look at it better right here. There's 1, 2, 3, 4. If you count that as the fifth way, so it's about 5 weeks there of up move there as that happened. And look how strong it when it did this. Look how fast the full stochastic rose up and got overbought, while the MACD here, or the histogram bars, barely got into positive territory. That told you that it wasn't going to be a strong rally. And if you actually go and look at that, scroll up to here, you can see kind of this area right here is what it was looking like. So you had these weeks down, and then you had this rebound, and then you had a week, another one down. So that whole pattern there is 1, 2, 3 waves right there. And we could be starting that same thing over here. Literally, we could have just started, the first wave down. It may not be complete. We might have to go down here this next week, at least intra week. It may not have to close there, but at least intra week we could go down to test this 1235 50 period moving average. It is certainly still looking very bearish. You can see it's broken below 50 here on the RSI, giving strength to the bears. So everything on a weekly basis said that this is going to continue down. Even when we bounce back up, it should probably look very similar to this 2007 period right here, where you had 1, 2, 3, 4, 5, 6 weeks. That's 1, 2, 3, 4, 5, 6, 7. There's a total of 7 weeks. There are some bounces in the way, positive. And we're right in that same time period right now. We have 1, 2, 3, 4, 5, 6, 7, 8. So we're right in that same time period. We should be expecting a bounce very soon. So my thoughts are that if we continue down, we're going to head on down here and tag this 1235 area, and that would also get a lot of bears on board that would see this break of this 1250 area right here. They would see that break of the 1250 area and pile on board on the short side. But hitting this 50 period moving average, I think we should get a bounce off of it. So some of the bears, I think, will probably overlook this and not see this 50 period moving average here, and all they'll focus on is that break of the 1250. And while that is very important, it does not mean that it's just going to immediately collapse to 1200 or 1150. I think we should get a bounce off of here, off the weekly. Matter of fact, I think if we tag it early on, I think we'll close back positive for the week. I think is what should happen. So it could just be a flush out move, just to get some bears on board and to clean house on all of the stops that the bulls put in below that level, below 1250. You think about that, it's a 15-point move down, and that would clear out most everybody's stop, and also tag that 50 period moving average all in once. Then you could proceed with a rally for several weeks into July. I think that's possible. And then maybe you'll back test this moving average right here as it's curling over. Right now it's at 1317, but 3 or 4 or 5 weeks out it could be at 1300. So we don't know. So at this point I'm going to certainly lower my target here on how high we're going to go back up. On this chart, on the daily, it indicates that we could go up to here. This right now currently is at 1318. But again, as it rolls over the course of time, it could work its way down to approximately 1300 if you're talking several weeks out. I'm just guessing that's where it's going to roll to. So there's no way of knowing exactly until that happens. But again, a lot of people will be focused on this chart on the daily, and they'll see the 200 moving average. They'll see a break of it, and at that point they will be thinking that the market's going to totally collapse. And to me, if it breaks and goes down here to this 1235 area, I think that they'll just reverse it back up. I think it's just going to be a bear trap. I think it'll end up being a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5, and the whole thing just being a wave 1 in Elliott wave terms. But again, I don't focus on Elliott wave. I'm focusing on support and resistance and things of that nature, but all the technical analysis. But you have to throw a little bit of Elliott wave in there to try to figure it out, what it could be, what pattern it could be. But this would also support a chart here showing some moon cycles here, which I'll put this on here for you. Come on. And you actually scroll up here, the next moon cycle to turn date is right here. And this chart here is the 10-minute chart, and it does show the 5-day tick for this particular chart, and although it's not exactly accurate on the ticks, it does kind of indicate that we should have an up move coming soon. If you correlate the 60-minute chart here that we're looking at, as you can see, we went up and then we went back down, but this here is starting to climb on the 60-minute chart on the tick ratio on it, and it seems to be fairly accurate. As you can see, when we went down here in this move, and it turned and went back up. This one here, we turned and went back up, and this may indicate that at least short term we should soon start seeing a bounce in the market. I kind of think that simply because these turn dates here on the full moon and new moon here would also kind of indicates some turns in the market, and they seem to be fairly accurate right here, at least here recently they have. Now, I've looked at this chart before in the past, and it's not always accurate. Sometimes it is, sometimes it's not. But here lately, at least on this whole last 1, 2, 3 months here, all the way back to May, it certainly has been very accurate. When you got these full moons and new moons, they seem to produce bottoms. This one here, of course, it was off, it didn't catch this final bottom, but it did catch a nice turn in the market. That was a nice turn. So and then here it caught a really nice turn, as you can see, very large sell-off. And so what we're looking at here is another turn date coming here, and that appears to be around the 1st. I think that is the 1st of July, first trading day of July, I guess that would be, which would actually be July the 1st, this Friday. Okay, but we got July 2nd, 3rd, 4th is Monday, this coming following weekend. So basically you go from July 1st, the first trading day, to July 5th. So it could happen either or. That's what I'm saying. You're either going to have a bottom or a top right there in that time period, either on this coming Friday, July the 1st, or July the 5th, when you open back up the following Tuesday. So what am I looking for? Well, if we continue down and go on down to that 1235 area for a bounce, and it takes us into this Friday, then I would venture to say that would be the short-term bottom in the market, and from there we should stage a rally at this turn date here. So that means when we come back after the July 4th weekend, then you should expect the market to rally. On the flip side, if we start to go up in this week and end up positive for this whole week, and end up going in this week and on Friday, and it ends up being above, like say this area here, this 1298, if we end up doing that, then I think that we could very well have another wave down come starting the following week, because it's going to indicate a turn date. It's of some significance, I do believe. So it's going to be a tough call on this one, but to me it would indicate that. Now, getting back to this one here, I noticed that when you had a VIX 28 reading here, the market had bottomed. Now we got a VIX 24. So has the market bottomed? I mean, this one here was a VIX 18, similar to this VIX 22. 4-point difference. That's very similar to this. So it certainly appears like it could be a short-term bottom. It's just, this is just a tough one to call. It really is. It's a tough one to call. At least short-term. Again, on the 60-minute chart, this tick reading moving up right here would indicate that we should go up on Monday and Tuesday, at least before it would turn back down or roll back down at least. So these are just things that you got to look at. It's right now the futures are actually down about 5 points. So I don't know how they're going to be when the market opens Monday, whether or not it's just going to be a quick move down, and maybe it does go down to that 1230 area, takes a 1235 area and takes all those stops out. Maybe it does it quickly on Monday and then rallies the rest of the week. That's a possibility. It's really a hard call, but I will be looking for this Friday or the first day of the following week, Tuesday, to be another turning period, because this thing has been right in the past, and time-wise it would make sense that we can either finish a fifth wave down to complete this entire move down, or finish a possible wave 2 back up into that time period. So what I mean by that is that if this whole move, if it bottomed here with a wave 1, and we have started a wave 1, 2, 3, or I should say an ABC, which I've called for before. If we are going up into that time period, then I would say that this ABC move would be your wave 2 up with a larger wave 3 down to follow. And if not, if this is a 5 wave and we've counted it wrong, then you've got a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 down, and then we could be bottoming by this Friday and then rallying the week after for the ABC move on the predicted wave 2. So it's really a tough position to be, a tough call, and I don't know which one it's going to be. So I'm just giving you scenarios of what I'm looking for, and we just have to go by that. There is nothing much that I have seen here on the front of Dark Side News, other than this new interview here, Benjamin Fulford and Jeff Wrench, which I put on the blog for you to check out. Listening to it, he doesn't go into a lot. He's just saying a lot of the same thing that the old cabal, that's the gangsters that's been running the planet for a long time, that they are slowly being forced out. He did mention something I thought was funny, and that was that the recent Bilderberg meeting that they had last week or week before, I can't remember now. When they had it, they actually got ran out, and that I believe it was, I think he says I think it was in Switzerland, so the Swiss authority, I think that's what he said, that they went to run them out. They were going to go arrest them, and Henry Kissinger, here it is, talks about him, that Henry Kissinger and David Rockefeller had to leave for fear of being arrested from the authorities there. So that's funny. That's a good sign, at least on that. The other thing is that so far this has still been a turn date from the Legatus pilgrimage, which again was right here, April the 30th through May the 2nd. And the top was put in right there, and we have been selling off ever since. Now at some point we are going to have a bounce. I just don't know when that's going to be. When you look at this on the weekly chart, what I want to see is for them to possibly come down here, tag this 200-day moving average well before October, then have this market bounce back into October, and maybe by the week of October 23rd, the ending of that next legatus pilgrimage, I would expect that wave 2 to be complete. Wherever this line draws to, it could very well be the back test of this broken area here. And also you could draw a line here maybe at some point with connecting all these tops here on a weekly. Literally it could match up to where you go down here, you hit this 1150 area here on the 200 moving average and bounce back up into that period, into the late October 23rd period. You know they're going to try to rally this back up into the elections this year. So that would be my thinking, is that the summer we're going to go down when everybody's away on vacation, and then they'll trick everyone and start to rally it back up starting probably in late August, early September. They'll start rallying it back up into that legatus pilgrimage. So if all goes right, then we should hit this 1150 area here on the 200 moving average. I think it's going to be 1150. It's actually 1163 right now, but I think it's going to be about 1150 by the time it gets down there. Bounce up, and then the week of October 23rd, I think it's going to look like this right here. That is what I think is going to happen. I think they will start World War III then. I think they're going to invade somebody in the Middle East. It's all staged. It's all planned. We'll have another false flag event. I don't know what it will be, but they're going to plan something. It's already planned. So look out for that. By then, obviously as this thing bounces up and wants to come back down, it'll cut through this 200 period moving average like butter at that point. So on the shorter term, again, this is just really too tough to call. We're down in the pre-market right now, but that means nothing. We're down at basically a double bottom right now at the 1258. So does it turn and go back up? I don't know. I don't know the answer to that. Obviously, keep drawing this line out. That would put you at the 1310, 1315 area. Isn't that funny how that matches up with this moving averages right here coming together in a necktie? So it's hard to say. So what I'm looking for, obviously right now, it looks like weakness on Monday morning, and this would also allow this to dip down here and maybe curl up and get some positive divergence going, and put in a line right here after it dips down. It could dip lower again, could go all the way down to 1235. If it did, then you might see a rally up into the end of the week, and this to go up into overbought territory throughout the whole week, and the daily to curl back up as well. Looking at the daily, we would obviously expect it, once it curls down here for the first day or maybe 2 days, you'd want to curl back up, put in some positive divergence, and then run up into the rest of the week. If that happens, this is speculation. This is really a tough one to call right now, because the 30's pointing down, but it's oversold down here. So that's a tough one. And then the 15, again, it's pointing down. That's all I could say there. It's oversold here on the 20, pointing back up, and it's moving up here. Short term, or just, I don't know. So my best guess here for you is that we could see 1235 this week. If so, if it's early in the week and we rally the rest of the week, then that could be a turning point come next week. If we bottom this week into Friday at 1235, then that could be the turning point, which would indicate to me that we go back up. I don't know which one it's going to be. So that's it, guys. If you have anything out there on the dark side, you can shoot me. Be sure and shoot me an email at reddragonleo.com. Do appreciate it. I'll try to put it up in the blog for you. As of right now, I don't see anything of significance that's standing out that could make a difference in the way the market is going to move, other than the moon cycles right now, which seem to have been pretty accurate here lately, calling them. So we're going to look for that and see what happens come this July 1st, July 5th time period, Will it be a top or will it be a bottom? That is the $64,000 question. Good luck, everyone, both bulls and bears, and I'll see you guys on the blog.